In focus, of course, the stock is getting absolutely smashed in trade today. No other word for it. It's down as much as 5.5% on the back of the earnings. We've gone into the details, of course. So the question really from Raghavendra in Bengaluru is, should you buy the current market price? Samir, there's a reason why the stock is getting beaten down right now. And it was in the earnings, despite the fact that the management has indicated an increase in its outlook for revenue. Fourth quarter is expected to be a little bit weak. And the guidance, or not, rather not the guidance, but the fine print in terms of what contributed to the revenue in the third quarter really is what people are focusing in on. Would you say that it's a buy right now?
So, for a while, we've been saying that IT companies are trading at very high valuations, given the fact that they've been growing their top lines at 4 and 5 and 6%. As long as these companies are not able to accelerate their growth, and I think it's going to take a little longer than 1 year for them to reach mid-teens kind of a growth. And also, you got to realize that the base has become quite big. So, two things. First, we are seeing this transformation that's happening to AI, where Infosys, of course, is focusing. But I think it's still very early days to see if Infosys is able to capture a decent size of the market, which will allow them to accelerate the top line growth, because the traditional businesses are facing a bit of pressure, right? I'll say the growth is facing pressure, not the business. Now, the positive is that they signed good amount of contracts in the current year. I think quarter, they did about $2.5 billion US worth of contracts, which indicates that the revenues will continue to grow going forward as well. But we need to see whether it's 6, 7, or 8%. Now, the two negatives. One, we have Donald Trump coming in on 20th of Jan. There's a big worry that he is going to push for more employment onshore, and that could also be without the H-1B visa. It's a very strong possibility. He's done this in the past as well. If that happens, it does hurt the profitable margins of all of the IT companies, Infosys as well. Second, what I discussed at the beginning is this is a company trading at 26 times earnings. Current year, and if you go 1 year forward, about 23 times based on certain projections. Now, when you're trading at 23 times and your growth is 5 times, you're trading at a PEG of 4. These are B2B businesses. It's very difficult to justify these high valuations. I agree the cash flows are great, and there is growth opportunity and all of that, but to trade at a 4-time PEG and believe that it's sustainable over a long term is difficult for me to fathom. So from that point of view, I would be avoiding to buy by buying an Infosys at this point. But yes, at maybe 1600 or levels, if it ever comes, I don't know if it will, because there's a lot of demand in IT at the moment from the markets. But if it ever comes, that would be the time I would probably like to look at it.
All right.